Good morning, good afternoon. All right, so what do we have for today's agenda? I do want to go through some earnings. I know we couldn't cover it last two sessions, so I want to finish that one earnings that have been pending for some time. Do want to review two stocks and see which one, and also, maybe see what you like better than other. Both are play on AI stock, so we'll see the battle between two, reviewed from different perspective. And of course, the general discussion around macro and any other stock. There are some predictions. So this is, and I remember even last year, 2022, around mid of December, you'll see a lot of Wall Street firms start to come up with their predictions. I'm not gonna get into the details, but it's all over the place. And I'm not surprised. We looked at how the predictions of 2022 had worked out, and those were horrible. So don't trade or invest based on what the Wall Street predictions are. But it's good to just see. And eventually, we'll go back in 2024. We're gonna review how this 2023 predictions came out to be. So I think I have a list of firms who have come up with their S&P 500 estimates for 2024. So we're gonna look at that. All right, I realized my video is not on, so let me just get started with that. Yeah, so that you guys don't feel that you're listening to a black box out here. Okay. So yeah, we'll look at some predictions. What else do you have in mind? I know this is a like holiday season, things are slowing down. So, but I think these are also the days when, if you have time, this is the best time to catch up on other things than just trading, right? A lot of things to catch up on learning. So I've been spending a lot of time in terms of reading and learning, and maybe building my own system to track, earnings, companies, and stuff like that. And when it comes to that, I was surprised, and I became a fan of Value Line one pager. Oh my God, how much information can someone pack into one A4 size page? I was amazed at how much can you learn about a company from just one page. So what I did this week to go ahead and download for almost every company that I own in my portfolio, the Value Line page, and I'll spend, this coming week going through each one of them. Yeah, it's time to learn. I mean, there is always continuously, there is always time to learn. In fact, today morning, I don't know if any one of you were there or not, because but there was a live session from Tasty Trade. Who are Tasty Traders here? I don't see. No, Supal is not here yet. Anyone follows Tasty Trade? Tom Saznov, folks, for options. What do you follow for options? Where do you get your options education or learning from? Anyone? All right, pretty quiet crowd today. So anyway, today morning there was a live session from Tasty Trade, and it's not that there's anything new in that, but it was good to refresh the concepts around volatility, why we sell and not buy options, the benefits of managing early, having your, why IVR is more important, how to have your portfolio diversification. So that started at 8 o'clock Pacific time. So I jumped onto that. I think that is still going on. if anyone of you is interested. But right now they are talking about, and I know what I'm doing right now is probably as a, is that, one sec. Okay, let me just pull that out, which is, okay, so this was the, so we'll go through. Yeah, so morning, part one, why options. Number two was around building a portfolio. Right now, I think the Pete Mulmet session is going on. After that, there's a fourth session from Tom. So if you're interested, may want to hop on over there. Not that I would love you to be here, but I also want to make sure, if there is some better content, some pros, they're talking about options. If you want to go there, feel free. So I attended a couple of sessions in the morning, and they were, good to refresh those concepts. Nadia says, okay, just started out in learning. And is that about options or general investing, Nadia? Okay, general. Okay. Now these guys are more pro on the option side. Okay, so like I said, we'll go through some macro. I'll look at also some predictions from Wall Street, but let's talk about some earnings first, and then we'll also jump on to look at two AI stocks, and then we'll come back to macro. Sounds good? Anyone have anything else that you want to talk about? All right, so let's start with the earnings. And oops. Okay, so the company that I want to talk about is CrowdStrike. A quick update on what CrowdStrike is, if you're not aware. I've talked about CrowdStrike. I think it's been a few months since I talked about them. So CrowdStrike is a SaaS-based, software as a service-based cybersecurity company. I mean, it lies as a cybersecurity company. There are many companies that have, I think, pretty strong in cybersecurity. It all started initially with having your antivirus, and then started with becoming actually real cybersecurity by putting a firewall. Then the world moved from having a firewall on premise to manage everything over the air through SaaS. So CrowdStrike is one of the biggest player in a software SaaS-based cybersecurity. There are other big players on cybersecurity. You could, companies like Palo Alto Network. So Palo Alto initially was they were the biggest one in terms of your network security, firewall-based security. Then they transitioned over to they're transitioning over to the SaaS one. So that's one of the biggest one. Then you have a Zscaler, which is they popularize a zero trust security concept that don't trust anyone. The old days of your cybersecurity was, okay, you are in an office, then we built a moat around the office. Anyone that needs to enter into your office network, you'll authenticate it and then make sure, okay, once it's authenticated, everything else is good. But more, people started bringing their own devices. People started working from anywhere in the world. So that concept became very kind of dated. So then new concept came in, which is like zero trust. I don't trust you anymore, right? Even if I authenticated you, your badge has been scanned, but once you get into the office, every room you try to enter, I need to re-authenticate you. I have a zero trust in you. You want to access a machine, I need to re-authenticate you. So that's where the whole zero trust concept started. And now I think that's become pretty common. And there are other security solutions around identity security, which is like Okta is very famous. So there are multiple companies. CrowdStrike has been, it's a recent IPO. When I say recent, means less than 5 years old, and has really, grown their business quite fast. So let's talk about what their products are. So they have multiple products. Falcon is their main platform on which they build all their verticals for different requirements. So then they have a Falcon Go, which is for small and medium businesses. Means you don't need to have and I'm sure this is a little watered down version of their main Falcon platform, but it is much easier to install. You don't need any IT resources, and mostly for a small and medium business segments, those businesses, those who can't afford the big Falcon platform. And I think probably they are doing this to capture the market which Sentinel-1 is targeting. So again, both are on a similar market segment. CrowdStrike generally goes for big enterprise customers, and the Sentinel-1 used to go for small and medium business segments. So now CrowdStrike also came up with their Falcon Go, which is focused toward SMBs. This one, Falcon for IT, another new product, which is to unify the IT and tech ops, right? Then Falcon Foundry, which is a no-code application development solution to enable partners and other developers to build on top of Falcon platform. So this is what I really like it, because once you have other partners, other developers building on your solution, that's where you really you graduate from being a product to a platform, right? Then they also have a security incident and event management product called LogScale. And then latest one, of course, in 2023, if you don't talk about AI, you don't get the valuation. So they also came up with their own product called Charlotte AI, which is basically for their SOC compliance. Right? And they also did a recent acquisition for Bionic, which is for application security posture management. I really don't know what exactly that is. I need to spend some more time in learning about ASPM. Anyone out here from security side? Otherwise, I'm going to talk to one of my friend over the New Year party. So he's a VP of products in a cybersecurity company. Probably I'll get to understand from him what exactly ASPM is and how is it different from others. But anyway, let's look at the result. Q3 was a record of records for cybersecurity. Net new ARR, which is of 233 million. Those, if you have been tracking CrowdStrike, they actually changed the metric on which they want the street to focus on. Now they are saying, don't focus on the billings. That is not material to our business. Our business performance, focus on ARR. So they have got a new ARR of 223 million, record non-GAAP subscription gross margin, record non-GAAP and GAAP operating profitability, record free cash flow of 239 million. And now they have a rule of 66, right? Instead of rule of 40, which is what VCs look for, they are actually at rule of 66, right? Record quarter in their LogScale, which is a new business for them, and they have surpassed 3 billion ARR milestone. So 3 billion year annual recurring revenue. For the first time, they passed that. All right, so let's quickly look at the trends. So they have on a subscription side, healthy growth of 34% from a previous quarter. Other thing to note is the number of clients that are deploying multiple modules is increasing, which is good because you get your foot in the door by selling the platform, maybe sell a 1 or 2 module, and then the whole idea is to have the same customer buy more and more modules from you, because the cost of selling additional modules is very less as compared to cost of winning a new customer. So we would want to see them selling more and more modules to existing customers, because that's really give us a lot of operating leverage, right? So good to see that the number of customers having 6+ modules is up 42%, and number of customers having more than 7 modules, 7 or more modules is now up 26%. Right? Financial numbers, overall revenue for this quarter was 786 million, which is growing at 35%, 75% gross margin, $252 billion of free cash flow, and they got almost $3 billion on their balance sheet. So pretty strong balance sheet, I would say. And this is a punchline that came from from their earnings. Our single platform approach evolves and broadens the aperture of cybersecurity. CrowdStrike is cybersecurity's AI consolidator, liberating organization from legacy AV, which is your antivirus, subpar EDRs, and a hodgepodge of hygiene, compliance, vulnerability, device management tools, costly and clunky SIEMs, and confusing alphabet soups of immature cloud point products. Essentially, their punchline is, guys, we are a platform. If you are an enterprise company and looking to go for a solution, you'll probably have a solution for managing your incidents, right? Incident management solutions. Or you have a solution for your antivirus, for your application security, for your network security. So rather than trying to have multiple vendors and have a different solution and then try to knit together, their punchline is, we are a platform and have everything already ready for you. So that's I like it. I own cybersecurity in my portfolio. And so far, so good. The stock has gone through, I think, multiple, CrowdStrike. So, of course, this year has been great for it. But if you extend and look at, let's say, 3 year, it has gone through ups and downs as with all the other tech companies. And but so far, it's been up 151% for this year. And looking at the recent results, I think they continue to grow. Now, of course, the competition is also knocking at the door. We have a SentinelOne, we have Palo Alto Networks, another companies like Fortinet, etc., with a very strong balance sheet, good return on invested capital. So if you want to pick up some ETFs, Bill has already shared a couple of them. CyberHack, those are cybersecurity ETFs. That could be one way of investing, but if you're more interested in picking up individual stocks, make sure you have a time and energy to follow individual stocks. So that's a cybersecurity. Let me see if there are any questions. Sam says Kramer suggests PA Networks and CrowdStrike. Yeah. I don't hold PA Networks in my portfolio yet. I've never spent time in looking at PA Networks, but yeah, maybe. We should look at the numbers of PA Networks. Yeah, go ahead.
2015, my brother-in-law told me to go visit CrowdStrike because I went on the Wired Day thingy. You should go check it out too. It's like at Fourth and it's in San Francisco.
CrowdStrike? Yeah, so it's in CrowdStrike?
Yeah, it's in yeah. Go check it out. Ask them, maybe buy a share and ask them for a presentation.
Yeah, I mean, yeah, I go through the investor presentation, etc. But yeah, I haven't.
No, tell me you're an important person, because you are an important person.
All right. So yeah, so that's CrowdStrike for you guys. Lee asks, I'm interested in what to do for seller in low VIX situation. So Lee, right now VIX at 12. I don't think it's at. I mean, I have lived through single digit VIX in 2017, 2018. So right now VIX at 12, it's not that bad. And oh, now it hit just below 12, which is like lowest in what, 3 years? So I still, in this low VIX environment, at least what I've done in last 2-3 weeks was to put a lot of collar positions on my portfolio because I can, you know, buy the put cheaply and basically sell the call against it. So I've done that, but I think I'll still continue to sell premium rather than buy premium. You may want to look at maybe buying a long-term or long duration put spread for protection, because right now VIX is low, and if you're using a spread, you actually don't pay that much. That's one thing you could look at. But yeah, only thing we can do is don't go big on a position. When the VIX is really low, I actually scale down the number of trades and also the number of contracts that I do on each trade. And when the VIX is higher, when there is more fear in the market, that's where I generally would scale the capital deployed into trades. That's all I do. Another question from Chandra. One beginner question: don't the network companies provide cybersecurity integrated product that will be less expensive for these organizations? Doesn't look like to be the case. I mean, Cisco is the biggest networking company, haven't been able to pivot themselves or as an integrated provider of cybersecurity solutions, right? I think the issue with the big companies, I don't know the issue, but probably them becoming big, cybersecurity will be one small portion of their revenue. And unless you are someone like Satya Nadella who's ready to kill the cash cow, which for these big network companies are, let's say, routers and selling networking gear, and focus on the upcoming new businesses, it's difficult for them to compete against the likes of CrowdStrike. Microsoft had the same problem under Steve Ballmer, wherein they did not pivot quickly to the cloud because going to the cloud would have cannibalized their Windows operating system, which is licensing system, and no one wanted to kill the cash cow until Nadella came. He came in and he said, we want to focus more on the cloud and not forget about, I mean, if that means that we will get less from Windows licensing revenue, it's fine. It's a very difficult decision for a big companies to kill their cash cow and focus on new, this is what's called innovator's dilemma, right? If you want to continuously innovate, you have to think beyond your current revenue making product, and someday you might have to invest less in that and invest more in the new and upcoming I would say products. So that's a question. I haven't seen that happening in the existing big network organizations. Same was the thing with Cisco with their WebEx or their communication tools, right? So Zoom came out of Cisco. Eric Yuan, he was in Cisco. Sorry, he was in, WebEx is now part of Cisco, right? So he was in Cisco and he didn't like WebEx and he wanted to improve upon it. But that's very low priority for Cisco. So then he came out and he started creating Zoom. He created Zoom. All right, so that was a quick update on CrowdStrike. Sam said Ballmer was MBA, not an engineer. All right, let's talk about two AI stocks, and we'll see which one do you want to focus on, which one do you like better than the other. Before that, anything else? All right, so let's jump into this. So the stocks that we're going to talk about is Nvidia and Palantir. This whole 2023, the theme of 2023, or I would say the reason why markets are where they are, and let's look at markets. When I say markets, let's look at SPY. SPY is up like 23% in 2023, right? So that's a huge gain in just 1 year. But the main reason why this is at 23% is driven by top 7 companies, Magnificent Seven, and all of them have been riding the tailwinds of AI. Right? ChatGPT almost a year ago became, when when OpenAI unveiled their ChatGPT, it became the consumer applications to have 100 million users at the fastest pace. Everyone was blown away by the potential of AI, and then all the AI stocks went through the roof. So Nvidia is one of them. It's up like Nvidia is up over 240% for the year, right? It was 138 at the start of the year. Now it's almost hitting $500. The other stock is Palantir, right? And again, these are very, if you look at Twitter or YouTube or any of these social media, these are stocks which folks are very passionate about. Palantir is one such stock. It's up almost 185%. And both are play on AI. If it did not have this AI tailwind in 2023, you wouldn't have seen this spectacular stock performance. So now, if you are looking to ride on the tailwinds of AI, and of course, there are other stocks also that we talked about. Microsoft is has done wonderfully good this year because of AI. Alphabet because of AI. Not Apple yet, but these Microsoft, Alphabet, Nvidia, all riding the tailwinds of AI. So today we're going to look at Nvidia and Palantir and see which one of these two could be a better option for us as an investor going forward. Okay. I see a question here. She asks, have you looked at ANET? ANET, I think, is Arista Networks. Actually, I have not. I mean, I looked at way back, but then that time they had a huge customer concentration, with majority of the revenue was coming from Facebook. I think that time it was called Facebook. Now it is Meta. So I was not very comfortable with them, with the customer concentration risk, and haven't looked at it since then. And I know that they have done wonderfully well. It's up almost 100%. And Jayashree Ulal, she is a very well-respected CEO, and I think she honed her skills in Cisco before she moved out and created Arista Networks. But I have not looked at. So let's maybe have a little deviate a little bit, and I'll quickly look at Arista Networks. So hold on, let me just pull up their net financials. Hold on. Okay, so there we go. Okay, so let me come and we're looking at Arista, not NVIDIA, Arista Networks. All right, I think I got data. So let's look at their, oops, the business metrics. Let's look at their nice growth in revenue. Year on year, revenue has grown, what, 49%. 3-year CAGR is 24%, 5-year 15%. That's pretty nice. 61% gross margin, 30% plus operating margin for a company with a hardware. That is pretty good. These are like software like margin, good free cash flow. 400 million, $448 million, and nice income, return on capital also good. So far, that looks to be good. Let's look at the latest quarter. We have 28% growth, free cash flow. Everyone is focused on free cash flow. That also nice. And I think this does look to be a decent company. Right now, I just looked at the numbers, but I have no information on their products. No information. I know that this is into networking, competitive to Cisco. That's all I know. See, I know about the CEO, but just looking at the numbers, looks to be good. So Shri says, I understand they are diluting the shares by compensation, but they are able to. So I do track free cash flow minus, stock-based compensation. So even if, at least in the latest quarter, there was $687 million of free cash flow, and probably very less your stock-based compensation, because even if you subtract it, you still are left with $600 million. So I don't think that the dilution is that much, but yeah. So probably they might have turned the corner. Looks to be, after stalling the growth for almost 3 years, last 2 years, spectacular growth. So I think I need to look into a little more details. So yeah, share-based compensation has been increasing. You're right, Shri, that it has been increasing steadily, but so was the probably 2022 is not good. But in 2023, I think they're focused on free cash flow. Asif says, what service do you use for getting financial analysis spreadsheets? Oh, no service. That's what I think I was telling at the start, that I spent a week in terms of focusing on learning. So I built this. This is a homegrown stuff. I just need to add more information into it. So good, fine. Maybe I'll have a look at Arista Networks and put it on my radar, because at least from a numbers perspective, it does look decent enough. Okay, so let's get back to our, NVIDIA and Palantir. So NVIDIA is riding the hardware requirement, the wave of hardware requirement, because it develops the chips that are needed for generative AI. And Palantir is riding the software wave, because they have their AIP platform. Again, they announced their AIP platform early part of a year, with a pilot starting in May. It became GA in September. Now they're having customers try their AIP platform. But again, both are AI players. Looking at the financials, Palantir financials, looking at the quarterly results, a year-on-year growth, 17% up in revenue, which is great. Operating margin finally positive after, the last 2 years quarterly were negative. They are now free cash flow. But if you reduce the stock-based compensation, so here's the case between, the difference between what we saw in the Arista Networks versus what we see here for Palantir. So Palantir, $131 million free cash flow, but majority of that is coming from stock-based compensation. So if you reduce stock-based compensation, your cash flow left is just $17 million, right? So that's not that great. They somehow eked out a little bit of a net income. I'm not too excited about it. You can figure out a ways to generate net income, but return on invested capital still negative. Where on NVIDIA side, still, even if we ignore, take into account stock-based compensations, it's $6 billion worth of, free cash flow. $18 billion revenue grew at 205%. That's why NVIDIA stock is where it is, because they've been growing revenue like crazy in the last 2 quarters. $7 billion free cash flow, $18 billion on their balance sheet, and 26% return on invested capital. Yearly numbers, I think that the chart will be more important. So if you look at NVIDIA, these are this is 2020. So 2021, 2022 almost stalled, right? Not much of a growth on revenue. 2023 is a different story. I think I probably might have a chart for that. Whereas Palantir has been growing their revenue steadily, and they have been reducing their stock-based compensation. So one of the big issues with Palantir was huge amount of stock-based compensation. So good to see this trajectory of stock-based compensation coming down year after year, whereas the revenue is increasing year after year. Near future, NVIDIA expecting to ship more than 500,000 their data center GPUs in the current quarter, means in Q4. And when we look at a Palantir, as per IDC, the AI platform market could grow to almost 36%, right? So, but government spending, because Palantir still derive a lot of their revenue from their government customers, they are switching to move more and more into commercial, but still right now majority of revenue is still coming from their government customers, and their expectation is that they'll probably grow at 16%. So looking at their current valuation, NVIDIA is trading at PE at 64, which is super expensive. But if you look at forward PE, which is looking at your earnings estimate, that's like 23 multiple. Not super cheap, but not as egregiously bad as 64. Right? Palantir forward PE is at 61, still pretty expensive. Price to free cash flow, 68. This is 83. Apply the reverse DCF based on today's pricing, or I would say, Friday's pricing. 30%, almost 30% year-over-year cash flow growth has already been priced into NVIDIA. And the question is, will they be able to grow like 30% for the next 10 years? Will they be able to grow their cash flow at a 30% rate for the next 10 years? That's already priced into the stock right now. When it comes to Palantir, currently trading at $18.18, almost 29% or 28% growth is already priced in for the next 10 years. Now, the bigger question is, who will be able to grow at a clip of almost 30%? Who will be able to grow their cash flow at the rate of 30% to meet the valuation which is already priced in? Uh, to me, looks like both are overvalued. Once this AI hype, tapers down, we should see correction in the stock as well. Like growing 30% clip rate for next 10 years, it's not impossible, but all that growth is already priced in. So where's the next, what's the next, I would say, tailwind for the stock price? So I'm cautious on both of them. I own both, and you guys know that I already kind of sold half of my NVIDIA position, and now I'm just holding the rest half and reducing the cost basis. Palantir, I still hold it. I've been, selling options against it, selling calls against it, or doing strangles to reduce my cost basis on Palantir. So before we decide on or have thoughts on which one we want to go with, so now at least I presented you the numbers that we have, right? I just want to look at what Charlie Munger had to say when you are trying to evaluate any investment. This is like almost 2,600-year-old wisdom on how you should evaluate the investment. So investment insight from Oracle Aesop was, a bird in hand is worth two in bush. To flesh out this principle, you must answer only 3 questions. How certain are you that there are indeed birds in the bush? Now, when will they emerge and how many will there be? Right? That's all. So projecting into a future, how certain are we that NVIDIA will be able to grow at least at 30% for the next 10 years? Same is the case with Palantir. And that will determine, at least for me, which one I would want to focus on. Now, looking at NVIDIA and Palantir as 2 companies, to me, it looks like NVIDIA already has demonstrated by the numbers that the AI story is playing out for them. So they got a good numbers to back it, to back their current valuation. Palantir, on the other hand, even though I'm bullish about Palantir, I mean, we started talking about it Feb at $6. I think right now Palantir is running more on the story, less on the numbers. And we need both. For a stock to outperform, we need a good story for the future, but then also the story has to start converting into numbers. When it comes to Palantir, I haven't seen that happening yet. That doesn't mean that it may not happen. So between NVIDIA and Palantir, I'm still more, both are overvalued, but I think unless Palantir shows up the growth in their AIP platform, the stock is just writing a story. And that story is not backed by the number yet. It could be, it could maybe a quarter or 2 quarters later, if we see the more adoption of the AIP platform and their ability to drive a lot of revenue. Let me see, what was the gross margin for Palantir? Not really, let's pick up operating margin of 7% in recent quarter. Right? That doesn't look like a software company to me. That means they have to spend a lot of they have a lot more expenses in building and selling the software. Right? So, and if this if they are not able to increase their operating margins, then how do you convert the big AI opportunity into a profitable business? That's going to be a big challenge for them. So for me, that is my position is Palantir is right now just writing the story and doesn't have the numbers yet to prove it. That doesn't mean that they cannot get to those numbers, but I'll rather wait for a quarter or two to let the numbers prove that they are really worth at whatever valuation they're currently trading. Yeah. Between these two sitting right now, from my perspective, I think NVIDIA is cheaper than Palantir, even though both are overvalued, but by any metric. Sorry, was there a question?
How long ago did you buy Palantir when it was about 650?
So Palantir was six. Let's look at Palantir.
When did you buy it? You bought it at around 650, right?
No, I bought it at multiple tranches, right? So I think first time when I started I mean, different ones. So I bought Palantir in 2020. The first time I bought was in 2021, I guess. That time when it was around $20 or something. I did an initial position so that I have it on my radar, right? And then when it fell down almost to $5, $6, and then because it was on my portfolio, I'm like, why? What is happening here? It looks to be too cheap. And then I reviewed it again. And I think that's where earlier this year, I talked about it and I say why I'm now bullish at this particular valuation. So I'm going to scale into my position. Yeah. So first time I bought, I think was $20, but then I really scaled at around $6, $7, $8, $10. Yeah. So since then, now I'm reviewing it every quarter. And to me, so far, I mean, it's been riding on story, which could be, I mean, as long as the story is alive, as long as the hype is alive, that's fine. But eventually, it has to be backed by its numbers. Bill says, can pull data from Finviz into your own spreadsheets. Yes, that is also possible. Ross says, AMD new chips made dent NVIDIA's projections. Yeah, I've heard about AMD, what's it called? M1000 chips or something like that. And right now, I think even Intel had their investor day on Friday or Thursday. They did not reveal much about their Gaudi chips yet, but they're also working on some AI chips. I think right now, everyone will be talking about either AI hardware or software or how to use AI in their business anyway. So that's pretty common. Cool. So which one let me ask you now, given this information, which one do you think you want to put your dollars in? Intel and AMD. Intel had a great month. We look at Intel, like is up what, $47. No takers for NVIDIA or AMD, super expensive. Sorry, no takers for NVIDIA and Palantir.
Some major news organizations said NVIDIA is the cheapest of the big Magnificent Seven.
And who said that? NVIDIA is the cheapest?
I'll look for that.
Yeah, looking at maybe the forward. So and this is sometimes counterintuitive. NVIDIA actually became cheaper at 400 plus than when it was around $200. It's difficult to wrap your head around how could that happen? That when NVIDIA is trading at 400 plus, and you're saying that it is actually cheaper than when it was trading at $200 or $150. But that's the reality. I mean, when you look at when it was trading at 150 at the start of a year, we did not have an insight into what their projected the revenue would be. And that time, if you had looked at its forward PE, that was much higher than 23. So in fact, after their second quarter earning result, when the stock was up like 30%, and after their third quarter earning result, their forward PE actually came down. It became cheaper as a stock. Even though the stock price was up, it became the cheaper stock. So I agree that but I haven't looked at whether, between NVIDIA and Google and others, which one is the cheapest one. But it became cheaper at 400 than it was when it was trading at 150. And this is a different concept. It's a different way to look at a companies, because I do attend some meetups or I jump and look at some videos, and I'm appalled by someone saying, oh, this stock is expensive now because it has $300. Oh, no, you don't look at a stock and say it's expensive by looking at what price a stock is selling at. You have to look at it's expensive or cheaper based with respect to, number one, either the full market capitalization, total market cap, or is it cheap or expensive with respect to the earnings projection. So when you look at NVIDIA's earning projection when it was trading at 130, that time it was expensive, then now it is trading at whatever, $400. Chandra says NVIDIA makes sense from this with the future perspective. Adding some Palantir is good. But yeah, make sure if you're taking any new positions in this, don't go all in at least I wouldn't go all in into the current one. I'm at least not planning to add anymore because I already own. So I'm not planning to add anymore. I just want to be very clear. Okay, think NVIDIA stock is pricey. Why it's actually the cheapest AI play out there? Okay, that must be bad on article. Oh, they're talking about stock PEG ratio. Yeah. So yeah, that includes your earnings growth, and earnings growth has kind of blown away all the expectations, whatever the street had about NVIDIA. And that's where their price to earnings growth has probably will be the cheapest one. So that's between Palantir and NVIDIA. All right, so let's get back to the macro level stuff. Haven't touched it. So let's see what else the market has to offer to us this week. Okay, I see another comment. Shansai, as both are expensive and Microsoft, Google are also, what other alternatives that we can think of in AI space? Again, my personal thesis is Microsoft, Google, I mean, the existing big players will continue to be the winners in the AI space. And right now, they are trading at expensive valuation. it may be for a reason that they'll probably grow into that valuation. So I don't want to go into, let's say, some small unknown company just riding on the hype of AI. So I would not look for the other one could be, so we got a Microsoft, Google, Apple hasn't talked anything about AI yet. So that may be another company, but Apple is not rating cheaper anyway. So if you look at Apple, any of these, all the Magnificent Seven, none of them are available at, I would say, reasonable valuation. So Apple is trading at 27, 28 forward PE, 32 of current PE. Whereas if you look at Apple, revenue has been stagnant or almost down. So this is like just chasing of performance at the year end. And I don't pray for this, but I somehow have a feeling that this probably will not end. There will be some correction in all these high flyers. I always have this hype will die down. Now, how long will this continue? That's anybody's guess. What about Oracle? Oracle recent results were not good. They are facing a lot of, so the only thesis on Oracle was their OCI, which is Oracle Cloud Infrastructure. The Oracle came back from dead to, let's say, if you go to the weekly, so in 2020, so Oracle stock, if you really look at, didn't do much in last 8 to 10 years until 20. Okay, like we can call this is like COVID tailwind. Every stock was riding this COVID tailwind. But what Oracle did differently in 2020 was they're pivoting and building their cloud infrastructure, which is their OCI, right? And this whole tailwind that we have seen in Oracle, I would say, starting from end of 2020, from their $60 or $50 all the way to now 103, is because of the expectations that they will become a viable player on the cloud side. But if you look at the recent quarterly results, I haven't looked into the results, but what I heard was a summary saying they are facing a tough competition, and the growth in their cloud business is not what market was expecting. So of course, then market punished Oracle about it. I don't think there is anything else left. There is any other investment thesis in Oracle other than their cloud growth. All other businesses are pretty much mature business that they have. And if cloud growth doesn't work out, then I don't want to be invested in Oracle. And so far we haven't seen, or at least I haven't seen any announcement from Oracle around their AI and all that stuff. Other way to play would be, of course, whether it is NVIDIA or whether it is AMD, all of them will need a chip. So you have your picks and shovels play by looking at chip manufacturers or the players in the supply chain of chip manufacturing, right? Like Lam Research, you got Applied Materials, TSMC, you got ASML, so Synopsys, Cadence. So these are the companies which are in the supply chain of building chips. So that could be another play, because doesn't matter whether it's been AMD chips or whether it's going to be Intel chips or whether it's going to be NVIDIA chips. These chips need to be made. So the companies that are involved in the chip manufacturing supply chain, they all benefit irrespective of whichever chips eventually wins. That's another way to look at. Chandra says, sorry if I missed to hear. Is AMD Intel a buy as an alternative to NVIDIA at this time or price? I haven't looked at AMD, but Intel, not right now. Again, Intel wrote the, oops. My keyboard is behaving wonky. Oh, jeez. Okay. 1 sec. Okay. I can't have, my keyboard is now being wonky, so I don't know which key is depressed that it does not allow me to type properly. 1 second. No. Yeah, so in Intel have had, I'm not sure about Intel, that is it a good buy at a current price? I mean, they had their investor day, what, this week? They didn't come and talk much about their AI chips. Market was expecting, but they were just talking about the refresh on their PC chips rather than talking about more on the AI front. But if there is a reason to invest in Intel, it should be, it's just that US considers chips manufacturing as a strategic play for us as a country, and we want to have, and they will encourage a lot of investment and production of chips within US. And Intel is the only US, I mean, there are other ones, global foundry, but not at the scale of Intel, is that, it's just like same asset like Boeing. It is strategically important for us. But Intel has been like very much behind the race with TSMC, etc. There is another, what would be, okay, interesting to see a long-term comparison, say 5 to 10 years. You're looking at this magnificent total chart. So what do we have here? Okay, since 2022. All right, let's continue. Okay. Oops. All right, page down works, up and down arrow key works, so I'll stick with those. Okay, so at a macro side, Fed, I mean, the markets were great because we thought maybe Fed is going to pivot, and or what is, so we saw market, I mean, maybe a pivot coming from Fed, or that's what the market at least perceived. But I was surprised to see that the trillions of dollars of US stock economy is based on this dot plot, which the Fed, the federal governors, they will come up with this dot plot, and geez. I would have thought that given the AI and all the high-tech things we talk about, our Federal Reserve will be more high-tech than this. But no, this is the dot plot that is often talked about on financial channels, where you say Fed came up with a dot plot and everyone focused on the dot plot to see what Fed wants to do in terms of interest rate, right? This is pretty rudimentary of a dot plot. But this tells what the different, the members of Fed are thinking about their rates and all that stuff. So what happened in this week? The dot plot pointed that there could be a 3 rate cuts in 2024, right? And that means not only they're gonna not hike the rates. Earlier there were projection of maybe they will do one last hike, but looks like now not only no hikes, but there are probably 3 rate cuts, which was more than 2 that was earlier estimated. So more rate cuts is good from for the stock. So that's why we saw stocks going higher. Also, Fed is now endorsing maybe a soft landing. So some experts are saying that the plane has already landed. So don't even worry about soft or hard landing. But based on what the FOMC meeting looks like, Fed thinks that there probably will be a soft landing. Third thing, which was different than of a previous FOMC meetings, was a comment from Jerome Powell, talking about that Fed inflation doesn't have to reach 2% for the Fed to start cutting rates, which was very different kind of a message that Fed has given to the markets earlier. Wherein earlier they've been talking about we have to see the inflation at 2% before we think about cutting rates. This time it said that you would want to be reducing restriction on economy well before 2% so you don't overshoot. And that was little, I would say, pleasant surprise for the market, that maybe Fed won't wait for the inflation to come to 2%. Maybe even if it is 2.5%, they should be okay with it. So these were, I think, 3 main, I would say, the outcome of 3 main outcome from the FOMC meeting that caused market to, assume that everything is good now. We don't have to worry about any recession. Fed will start to cut rates now as early as now. Someone is talking about even in March. Not just Bill Ackman, but I think other people also thinking maybe we'll see some rate cuts in Q1. Ross, didn't they walk back their rate cut comments the very next day? Obviously there was no other press release or anything from JP, but I think there were interviews of some of the other Fed committee members in which they wanted to clarify. And I think the reaction was that they just don't want market to start celebrating too early. So they were kind of try to temper down the expectations of the market. So what did we see? We saw S&P 493 playing a catch up with the other stocks. So far only Magnificent Seven had worked. So over this week we saw 1 month returns. Now the other S&P are catching up. So Magnificent Seven haven't done much in this month. It's only up 1.4%, whereas the other stocks, especially look at your small cap stocks, are up 11%. So if we go to, let's see. Oh, my keyboard is gone. Yeah. So small cap is up 11%, equal weight is up 8%, dividend is up 6.4%, S&P is up like 5%. Now this is what's called as a classical, rotation of money, moving from Magnificent Seven to other parts of the sector, which is the things that haven't worked out so far. Right. So other thought is around the cash. So now, given the fact, if we start to see the interest rate cuts in 2024, that time cash may not be the king, right? So almost $6 trillion are into money market funds and CDs. Now, another thought is, if the rates are going lower next year, how much of that $6 trillion will start to flow into the stock market? Whether it's going to come into the stock market, whether it's going to go in the bonds, we don't know yet. But they may not stay. If your Fed rates are now down to like 4%, 3% next year, some of that money will start to flow into the market. So that's another one. The next one, looking at market predictions. This is a chart that we looked at last week also. So the right side is what it was last week. So last week, for 131, like 4% probability that they would start to ease. Now there's almost 10%, almost 70% probability that by Q1, Fed will start to ease or cut down the rates, which wasn't the case at all. I mean, earlier it was like 45%, but now it's almost 70%. And that's where driving all this euphoria in the market right now. Looking at investor sentiment, we are still no change from the last week. Investor sentiment still firmly in the greed side. So that's where it's time to be cautious when others are greedy, and time to scale up when the others are in extreme fear or fear. So that's on the investor sentiment side. What else? Crypto side, not much of a change. I mean, it's still trading between the biggest one, Bitcoin, is have gone through places between 40K to 43, 44K, still finished the week around 42K. Again, the same tailwinds, ETF discussion continue to go. And right now, I think between the SEC and the issuer, the big disagreement or the discussion is in kind versus cash issuance or redemption, in terms of how the Bitcoin will be procured and how the redemption and the issuance will happen. Bill says 2024 is election year, yes, and then I don't think any incumbent government would want to see people the people's 401k going down this year. So that also could be a tailwind for the markets. Other tailwind on when it comes to the crypto side was on, we've talked about this earlier, FASB fair accounting. So this ruling actually came out this week in terms of, if there are companies that are holding these crypto assets or mostly Bitcoin, I think there are some companies that are holding Bitcoin on their balance sheet. How would that be accounted for going forward? So that change will happen in December 2024. The deadline is December 2024, but some companies could tend to do it even sooner, which means now, because of this change, they will be able to take any gains that they have had on their Bitcoin holdings into the income sheet, into their P&L statement, which is great, because till now they were not able to. It was like a one-way street. If the value of our holdings go down, you have to take basically show a loss on your balance sheet. But if it goes up, you don't get to enjoy the upside until you sell it, right? But now the FASB is changing the rule so that it becomes equivalent to how any other asset is treated on your balance sheet. it will be based on the current market value. So if it goes higher, you take gains. If it goes lower, you take the loss. So there are certain companies that hold Bitcoin on their balance sheet: Tesla, PayPal, Coinbase, MicroStrategy, Square. And if they have to, and I don't know when each one of these individual companies will be making use of this new rule and on their income statement. But if and when they would, we should see gains reported because of their holdings of Bitcoin. That depends on when did they actually bought that Bitcoin. But till now, even if these companies have bought Bitcoin, let's say at 20K, and Bitcoin is trading at 40K, they were not able to show 20K as a gain. But now, after this ruling, they will be able to show it. I think the election made Chair Paul to change the statement on rate cut, but not waiting for 2% inflation. Yeah, possible. I mean, even though Fed is supposed to be an independent entity, but that's not always the case when you're appointed by the president. Bobby, do you consider any other cryptocurrencies for investing other than BTC for better returns? There are a few that I hold, but I think the majority is BTC. But you have to be really careful. There's a lot of like Bill says, right? A lot of stay away from shit coins. There are many of those, but so my majority I would say would be BTC. There are others which is also have let's say Ethereum, some Polkadot, some Cardano, and I guess maybe one or two others. Again, you have to spend time to understand and follow these projects. Otherwise, it's just a lottery ticket. How do you feel about Doge and SHIB crypto? I don't know. Those are what those are supposed to be meme coins, and those are meme coins. If everyone starts to pile into it, yeah, they'll grow. Otherwise, I mean, there's nothing much happening over there. Tesla at some point of a time wanted to, I don't know, maybe Elon used to have those Doge pictures, and that will pump up the Doge coin. But unless Elon starts to use it for whatever he has in his mind, there is nothing much happening on that ecosystems. There is Solana is going in a lot of pump happening right now. I see in the Solana side, a lot of pump around there through airdrops and whatnot. But again, you have to, this is still Wild West when it comes to the projects. So you have to be really, really careful what you want to do. The only area where I see some institutional interest is either Bitcoin or Ethereum, because Ethereum ETF are also being filed for spot Ethereum. I have not seen any other coin or any institutional issuers coming up with a product that the institutions could adopt outside of Bitcoin and Ethereum. The rest, everything is just going on based on the narrative or the story. And those stories could play out, don't get me wrong, but you have to be really careful. Right? Which ones are stories, which one is pump and dump. Okay, that's enough on crypto. Oh, one last thing before I finish the crypto stuff is I think was it Thursday or something. I jumped onto a session wherein they were to talk about how to get Bitcoin into your IRA, and that's where the vibes of those pumps started to show up, because that issuer was all talking about get ready for the bull run. It's going to be great. We'll tell you how to get the Bitcoins into IRA. We can help you move your money from other IRA into this. And no one was thinking about any risks. Right? I don't think we have yet reached the level where we were in 2021. So and probably that would start to come up after the halving and the ETF gets approved. So right now, all the excitement in the crypto community is based on the pending decision by SEC on Bitcoin ETF approval. If that does not come through, which right now the market participants are saying that the probability is very, very less, it's kind of almost done deal that SEC will approve it. And that's why we see a lot of this excitement. Yeah. All right, let's geez. All right, unfortunately, let's see if I can get this. This doesn't work. Okay. I don't know how to expand this, but I just wanted to. Let me see if I can close this and do it. Maybe start, open it again. And if that solves the problem. Okay. Woo! Hopefully that's okay. Yes. I don't know. Why did the Microsoft Word hang? I thought it's everything about my keyboard. Okay, so you can, what did I buy or sell this week? I bought a little bit of Baba and C Limited. And I think right now I'm done with whatever position I wanted in these two. I bought Baba because it was like trading at $70. And I talked about it. There is, of course, the risk on which you can't put any number, which is a CCP risk. So you have to be careful about it. So I've done my position based on that risk, which I understand. And I sold a bunch, not sold a bunch because I was bearish about, I'm bearish about it, but all of them were because of covered calls that I had against them. I had some of them get called away from me. Some of them I closed the call and sold the shares to basically pay for the closure of a call, right? ARKK, Snap, PinShop. I have no issues in these stocks. These stocks have performed great this year, and there is some portion that I still hold all of them except I think EWW in my portfolio, and I was on a portion of these holdings. I was playing. I selling calls to reduce my cost basis, and some of them have been called away. So that's a buys and sells for this week. Any questions? I see one more. Do you share the document? Oh, I don't share the document, but yeah, Zoom recording will be up on my website. So I can share the, maybe if you just write, you can email me and I'll send you the link of where it is on my website. Just email me over here and I can send you the link on where it is. These all recordings are, I generally by Sunday, I'll have this uploaded on my website. What is the worst thing that can happen to Chinese stock investments due to geopolitical issues with China? It could go to zero. I mean, I'm assuming that it would go to zero. See, we don't have all these ADRs that are being traded here in US. We don't have any operational control on these Chinese companies. These are all under the structure of VIE, variable interest entities, which is a very different structure that Chinese government have allowed these companies to get foreign money, right? So there is no operational control. Even if you own, let's say 30% of a Chinese company, you can't control their board. And of looking at the risk spectrum, maybe the stocks will stop trading at a US exchanges, but then maybe it will continue on OTC. So you could still trade on OTC, and of course, then it comes with all the other risk that is on OTC. Or maybe if because of the issue, they will suddenly stop all trading on Chinese stocks, and then you're like, it's your money stuck over there. Let's say that's would have happened to Russia. There was an ETF called RSX, which was a Russian ETF from VanEck. And if you had that ETF with you on your portfolio, let's go back. There's nothing much that could have done. It just simply stopped trading. In 2022, when Russia invaded, and then the US, because US government had sanctioned, put sanctions on Russia, this whole RSX it fell down from $27 to $5, and then it stopped trading. Now I don't know what you can do if you held RSX. What do you do with that? You can't sell it over here. There's no trade happening on this. Zero volume. Yeah, so you have to be careful when you're, I don't think we are at a situation like that Russia, but I can't put a number on the CCP risk. So any Chinese company, if you are investing in, you have to be comfortable with that risk, which is undefined. And the only way to protect that is make sure that the position size is okay. I mean, if all the Chinese stocks that I own go to zero, I'll still survive. Okay, all right. Predictions. Not my predictions, but many houses from the Wall Street have their own predictions of where SPY will be. They range all the way from 3,300 to 5,400. So I was pleasantly surprised to see Yardeni Research having a bullish target of 5,400, because generally they are on a bearish side. But JP Morgan is bearish for a target of 4,200, Morgan Stanley 4,500, Goldman Sachs 4,700, Bank of America 5,000, RBC 5,000, Fundstrat is 5,200. Fundstrat normally is called, generally is a perma bull. BMO is 5,100, Oppenheimer 5,200. We'll probably go back in same time 2024 to see, which one of these were right and where eventually the SPY ended up in 2024. What's your prediction? Sold SPY 500 call for December 24. What we could also look at is, because looks like the like 5,000, 5,100, 5,200 around that seems to be the. So that was the. Let's talk about a trade that I think I did was. I think that was a caller. Maybe I did a caller for December 24, which was to, I don't know, 510 or 520. I think maybe I sold a caller. I did a caller with selling a call at around 520 or 510. I don't recall what exactly was that. And then bought basically a zero cost caller. And I was like, okay, if the market goes, to 520, which is one of the highest level of their prediction, I'll still do pretty good. I mean, we'll be up, what, another 15%? from where the market is currently, and I can live with that. But if it falls, if it goes down because of whatever recession and all that stuff that's happening, at least I have a protection, fully protected after 4:30, right? So, and given where the VIX is, I thought maybe let me grab this collar trade for the rest of the year. So I think I did one of these. So you only sold call. I actually sold call and bought a put, Shri. And basically the idea was to just reduce the delta. Chandra said Fidelity Fin Advisor predict a correction by half of 2024 and the value could be 4,200. Yeah, I don't know. I mean, predictions are just predictions. 2023, everyone was predicting recession, bloodbath, didn't happen. And it could happen next year, who knows? There will be one day everyone's predictions will come true, but what we don't know is what that day would be or what that year would be. Okay. All right, so this is maybe here we just created a trade given VIX where it is. Now given where we think the most bullish Wall Street firms are with their target of 5,200. Here you get a protection for your portfolio. You can craft a protection for a portfolio, provided you're okay to not participate in the gains beyond SPY is at 520, right? If you're happy with this 15% gains on the upside, you could actually have a free protection for your portfolio, which will protect you from any downturns beyond 10%. So 470 review, yeah, even less than 10%, right? 8-9%. So you're protected from any drawdown below 8-9%. And you're not paying anything for it, like 6 cents. So yeah, so I did that trade after I saw these predictions. Any other trade idea, Shri? Oh, thank you for bringing this up. Yeah, that reminded me. Yeah, we could about my own trade. So right, so we're done with. We already did CrowdStrike earnings. We did this. Okay, another one. And this is, if you're on Twitter, you'll see this bullying, booming, this option selling. 2022 was a year of portfolio protection strategies. 2023 has been a year of income generation by option selling. I don't know what 2024 will be, but depending on what the market mood is, I see every year there'll be a flavor of the year strategies coming from institutions. And we talked about one of that last week in terms of from a yield max on their trying to regular income generation strategies by having a synthetic position and selling options, selling calls against that. And I wasn't wrong, right? This is a report from, I think Gunjan Banerjee is Wall Street, or is she Bloomberg? I think she's Wall Street reporter, and very well respected reporter. Now she reported option selling is booming like never before. Assets and derivative income funds, and that was like one of the income funds that we reviewed last week, has jumped to a record $64 billion. That is 50% jump from the last year, and highest level in the records going back to 1996. So if you're suddenly became interested in options because seeing a lot of other people talking about option selling, you're not alone. There is a $64 billion worth of funds that have moved into so-called income funds, which generate income by selling options. And unfortunately, most of those have underperformed the markets this year. But people will come and talk about, yeah, that's the income I generated. I made 6%, 10% dividend or 15% dividend, which is great. But what you gave up for that was like 50% gain in your capital gains in the underlying. So that's one big chart. And it's been a record year for the options overall, continuing a mania that began during the depths of pandemic. 44 million contracts have changed hands daily this year. This is redundant. Option traders spent more than $500 billion on Tesla option premium, more than any other stock or ETF. I did not anticipate this. I know there is a lot of interest in Tesla options, but the fact that $500 billion, oof. And no wonder why the issuers start to bring in more these products, which will allow you to take allow retail investors to just take a bet and try to hit it outside the park. And I'm sure that it's not that the retail investors have made money or option traders have made money in buying this premium. It's those market makers that they have made a lot of money in selling these options to investors. And of course, this is like 0DTE is a new, I would say, option drug. And lastly, yeah, I think this is where she's talking about lately interesting calls have been through the roof. Daily call option volumes. Again, similar, same stuff are what we saw in around 2021. The call volumes have started to increase by a lot. So you got to be careful in terms of when you're getting interested in options, what's the right way and what's the right instrument to pick up. Asif asked, basic question, does CBOE option exchange control the number of outstanding options? No, they don't. I mean, I don't know in terms of what's the control. So the number of the number of outstanding options will be in terms of whatever the open positions are. They don't control or limit saying, okay, you can do only these many. Chandra says, one question, option selling from stocks that you have. What's the best option to consider generating income without losing the stock? What is the expiration date that you consider? So I generally look at 45 days out, maximum 60 days out, and minimum 30 days out. So right now, maybe the next week will be the last week wherein I'll be actually putting up a new trades for January expiration. Okay. And I'll probably, week after next, I'll maybe just do a managing my existing January trades, but any new trades that I'll put in will be for February expirations. Now, this is not just the expiration that you have to consider. You should also have to consider what delta do you want to sell that option. If there's a stock that you really love and don't want to, you just want to, your idea is just to generate an income, then you should go and maybe sell far away delta, like 15 deltas, right? 16 deltas, max 20 deltas. I would rather say maybe if you hold a stock which could be a meme stock kind of a stuff, or it's an AI, then instead of a call, rather sell a call spread. Because if you had sold a call, like look at these JEPIs and JEPQs, right? JEPI had done, I'm sure JEPI had done really well in 2022, But if you look at JP, great that you got whatever 10%, 11% yield. You got 8.5% yield on JP, but you actually have drastically underperformed SPY. JPA holds SPY and sell call against it, and it's up only 1%. SPY is up 23%. So your total return, if you really look at, it's like 1.06% plus 8% dividend yield. You made only 9%. Okay, made 10%. Still, you're underperforming by 13%. So this strategy worked well in 2022 because the market was going down. But in 2023, in a rising market, the covered call selling strategy doesn't work unless you really know how to manage it well, right? JEPQ is 23%, and with a dividend yield of 10%, 33%, not bad at all. But JEPQ sells covered calls on QQQ. QQQ is up like 53%. So still underperforming the underlying by 20%. And if you held NVIDIA and just sold a call on it, and you would have missed all the upside gain on NVIDIA, which is like 200+%. So there are a few things that you should consider. Maybe I'll probably, once you send me an email, I can point out to a video that I'd done, I think one of these sessions a while ago, in terms of option selling or covered calls. What are the different flavors that you can use? Deltas you can pick up depending on what's your outlook and how much do you love the stock. There are different strategies that you can use. I can send you the link to that one. Asif, or is it limited by the total float of the securities, say for call options? No. So I don't think that the options are limited by the float, because when it comes to the shares, that's the companies that create the shares saying, okay, we have whatever $4 billion shares available, right? And if they want to raise more money from the market, they'll go and then create additional shares that they will have to sell in the market. But when it comes to options, companies have no say in those options. So options are created by the exchanges. If exchanges see that there will be a demand for traders to trade in options, and there will be enough market makers to create a market in the options, they will go ahead and create a market. Basically, they list the options. So that's not controlled by the total float of the security. Ramesh, I sold 650 Jan put for Costco. Yeah, so Costco did a $15 special dividend. I have to see, because eventually I don't know whether you can have an alpha trying to trade for this dividend, because prices, etc., everything will adjust considering that dividend is already coming up, right? So this it's a public news. So, but I haven't looked at Costco. This is one share that I have never had in my portfolio, and it's been a wonderful share. So, well, that's fine. Okay, any other question? All right, so let's continue. We got 15 more minutes. So be careful on the option selling side and who you follow. There's a lot of stuff on Twitter that you should be careful about. I see folks talking about options portfolio performance and not talking about overall portfolio performance, which is a little bit dubious, because, hey, at the end of the day, options is just part of your overall portfolio. So if you made great on the options, I want to know what's on the other side of the house, right? So anyway, let's continue. What else caught my eye this week? GameStop, the king of memes, the original meme stock, is now trying to become a holding company, just like Berkshire Hathaway. they announced that the Ryan Cohen, who is the chairman and CEO of the company, will have discretion on how to invest the cash of GameStop into other publicly listed companies. So yeah, I don't know what will happen to this company, but they're trying to, of course, their business is not really working out, so they're trying to do other stuff.
Do they have enough cash to invest? It seems like they need to survive first, right?
I mean, whatever cash they have, I don't know, but let's pull up. We can just pull up GameStop, GME. So balance sheet. So they have $1 billion. Let's look at quarterly. They have a $900 million cash, and then short-term investments. So they have close to $1.2 billion cash. So they do have that much cash available on their balance sheet. Now the question is, which is like a ridiculous, but then they have a liabilities of 1.4 billion. So what GameStop told that they will, the board has agreed to allow to basically invest in other public companies, and Ryan Cohen will take a decision, and also he will put his own money, his personal money, and invest along with it. I mean, this is bad at so many places. I just can't even talk about it. First of all, if as an investor in GME, if I were to invest my money, I don't want you to make a decision what other stocks are good for me, right? I am investing in because the GME, because of GME, and not that you are a fund manager. Number two, Ryan Cohen doing this investment along with this, there's a conflict of interest and all that stuff. What a crap. GME should buy a stock in AMC. That'll be a mother of meme stocks. So AMC, the same stuff on AMC. Where is AMC trading at? I think they continue to issue more and more shares. And yeah, there's nothing remaining on AMC as well as a business. Have you ever shopped at GameStop? No. I mean, why would we? The whole idea of,
Vivek,
go ahead.
I have an experience. GameStop used to be around 4th and Market in San Francisco. Stuff was not cheap. That was about a decade ago. And this time, 2 days ago, I took a bus, and the Excelsior district in San Francisco, or maybe not Excelsior, but it was in a lousy part of Mission, and there was GameStop. So I don't think they have much of a retail strategy. I mean, I didn't buy stuff 15 years ago, and now it's in the, kind of the lousier parts of town. Why would anybody buy it? I mean,
Only in a few days in a year they have some spark because of new hardware coming out in the market. Let's say Sony is coming with a new PlayStation, or Microsoft is coming with a new Xbox. And I mean, nowadays all the games are just streamed, so you don't go to a shop to buy the games. So yeah, I mean, there is nothing much left in a GameStop. And I think the rest of the Wall Street had also become wiser and don't short it. The only reason the GameStop became what it was because of the huge short interest, right? So that someone played really nicely. The community figured it out and played that game, but that game is over now. And from a business perspective, nothing much has changed. I mean, they changed the CEO. They brought in Ryan Cohen, who hasn't done much. He's like a meme king. He was now doing some meme plays on the Bed Bath and Beyond. So he had his success in Chewy, but nothing after that. Jay says I sell naked calls on GME sometimes. Oh my God, I don't have a stomach to sell naked call on GME because I don't know when that Reddit crowd will come back in the market. So, it already blew up one hedge fund, Melvin Capital. They just got decimated because of their short positions on GME. So, yeah, but I'm not gonna take any long positions in GME anyway. So what's their option selling for? Let's look at January 34th. Not, I mean, from a GME perspective, 100% IV is not that big. During the height of the meme mania, these numbers used to be around 300%. I've seen 400%. So yeah, that's not too much. But yeah, strange things happening. I mean, I'm just waiting when they will declare bankruptcy and go away. A lot of layoffs still continue. And this is where you see the other sign of, hey, will the economy go under stress? The recent one came out from Hasbro. Where did that go? Okay, this was different when I was looking in the morning. Okay. Oh, there we go. So it started with Hasbro. So Hasbro is cutting 1,100 jobs. They said on Monday because it's Christmas time and looks like they don't see that consumers will be buying as many toys as they had earlier. So they're cutting that 20% of their workforce. Spotify already did it a couple of weeks ago. Wells Fargo did it. Citibank is doing it. So Amazon is doing it. But this number is small. Charles Schwab, brokerage firm. So the layoffs still continue on the economy side. Which does pointed to the fact that maybe eventually what Fed wanted to do is actually happening, right? The labor market has started to cool down, and hopefully it won't get into recession, but I'm not taking any bets here. Next one, mystery stock. Any guesses which one is this? Which stock are we referring to? At the start of November, it was like $180 and now 263. Yeah, she got it right. That's Boeing. I don't know what is driving it. Does anyone know what's driving such a spectacular? Suddenly it looks like a meme stock kind of a behavior. I mean, the chart looks like that. Look at this growth in Boeing from 176 just in like at the end of October to 265. Has China agreed to buy all the planes from them? Is it too much too soon, or is it just that the cycle rotation that we are seeing? I don't know what's driving all this craziness in Boeing. Anyone tracking it? I mean, I'm happy that this is happening because I hold it in my portfolio. But one part which is making me nervous is, what's the reason? Is there any news around Boeing? I didn't. So UBS came up with a buy rating. Oh, okay. Okay, so analysts. So I think some analysts have upped their targets on Boeing, but I don't know if these analysts, they all upgrades came on 15th. Are they just chasing the price? Right now, looks to be the case. Asif says covering loss on BA that I've been sitting on 4 years. I'm right there with you. Don't worry. I still not up to the price where I bought it, but so I'm just reducing my cost basis. and holding on to it. Again, my thesis was the same. It is too strategically important company to just, that the government won't let it fail. That was my thesis. That so eventually it will recover, but how long will it take? I had no idea. India is buying BA planes. Okay, I didn't at least see the recent one. So, yeah. And this is, it's like a multi-billion-dollar company, and when the stocks do like this, I tend to be a little careful.
It's been down almost 50% from the high. So it's just rebounding at this point.
Oh yeah, I mean it went down because of that 737 scare. And after that, I think there have been many false starts, but I don't think I've seen such a, let's go for 3 years. Only where I saw some bump here, and after that, I mean, this is like just crazy. And of course, there's a general market euphoria at the end of October that's also contributing to this. But yeah, I'm happy.
I'm long going.
Sorry,
I'm long.
you're long on this?
Yes.
I mean, I'm by default long because I've been still holding the stocks that I think I bought in whenever that first time that 737 Max scare came in and fell down from $400+ to somewhere 350 or something. So I think I bought it somewhere here. It's around somewhere $300. So still haven't recovered.
The point is the scare is always going to happen. Like CMG, there was a scare of E. coli and the stock dropped significantly, and now it is having a new high all the time. So Boeing is going to be at a new all-time high in the next 5 years maybe, or 6 years, whatever time period. If you're willing to hold it, you will make 50% of the return over the time period, 5 to 6 years. That's my idea of doing my trades.
Oh yeah, that was my idea because I didn't pick up CMG at $250 after that scare of rat showing up on their restaurants. And then I thought, hey, eventually, Boeing might recover. This is too much and all that, and I bought. And yeah, it's been almost 3 years now. Have to be really patient with this.
It's still a major airline company.
Exactly. US government won't let it fail. Either there's Boeing or Airbus. So that's a thesis. And
it might take a little longer time, but I'm willing to hold it for an extended length of time.
Yep. Yeah. Could be short covering. I don't know how much is the short interest on Boeing. So look at BA. Short interest. No, only 10 million shares short. So out of a 6, it's like 1.6%. Now I don't think it's a short interest. Again, I think what looks like analyst upgrades, that's what drove this recent jump in Boeing. Anyway, I think last topic, I'll skip this. ETF we talked about. We'll finish with this. Is a Google Gemini. So we talked about AI. Microsoft has investments in OpenAI, so their stock has done whatever great they have done so far. Let's look at Google versus Microsoft. So we got Google is up 50%. That's great. Microsoft 54%, it's almost similar. So Google came up with their own AI, which is their Google Gemini. And there was a video, and if you have not looked at that video, I would recommend you go ahead and look at it. So let me just go back. Where was this? Okay. So might play this one.
Right. Here we go. Tell me what you see.
I see you placing a piece of paper on the table. I see a squiggly line.
What about now?
The contour lines are smooth and flowing, with no sharp angle.
So when this came out, it was like it blew my mind in terms of the capabilities that this AI has. So I think this is what 6 minutes video. I don't think we'll go through the whole, but just watch this and then we'll talk about why, you know, what's the play on
Or
the Google
jagged
is.
edges. It looks like a bird to me.
What if I add this?
The bird is swimming in the water. It has a long neck and beak. It is a duck.
Yes.
A duck is a type of waterfowl in the family Anatidae. Ducks are closely related to geese and swans. The duck appears to be blue. This is not a common color for ducks. However, there are some breeds of blue ducks. These are typically not as common as other duck breeds. It is more common for ducks to be brown, black, or white.
Are you sure?
What the quack? I was just talking about a blue duck, and now you're holding one. It looks like blue ducks are more common than I thought.
Would this float?
I'm not sure what material it's made of, but it looks like it might be rubber or plastic.
What if I tell you it's making a squeaking sound?
Oh, if it's squeaking, it's definitely going to float.
Nice.
It is a rubber duck. It is made of a material that is less dense than water.
Can you teach me how to say this in a different language? And give me a few options. Ooh, can you
Middle of the ocean. There is no land nearby for the duck to rest or find food. It is unlikely to find ducks here naturally.
Okay, based on what you see, come up with a game idea. Oh, and use emojis, please.
How about this? We can play a game called Guess the Country.
Sure, let's do it.
Clue 1. This country is the home of the kangaroo, the koala, and the Great Barrier Reef.
Oh, that's easy.
So now they
Clue 2.
play a
This
game.
country loves football and has
And-
won the most men's World Cups.
Then there is another one where the AI is able to guess.
The cup to the left.
Nice.
I know what you're doing. You're playing rock, paper, scissors.
So
What
then
do you
I'm
see
playing the
now?
puzzles.
The fingers are spread out to look like the wings of a butterfly.
What's this?
Big ear and barking mouth. A dog.
Sweet.
The coin should be under the right hand.
I don't know.
The coin is in the left hand using a sleight of hand technique to make it appear as if the coin has disappeared. Both objects are round and flat.
There you go.
Both are food. The orange is a healthier choice than the cookie. Citrus can be calming, and so can the spin of the fidget toy. They are both examples of popular toys that have been enjoyed by children and adults alike for many years.
Give me some ideas for what I could make with this.
I see pink and green yarn.
So
How
now they
about a
talk
dragon
about
fruit?
the game
Or how about a
ideas.
green cake with a pink heart?
Okay, how about these colors?
Okay, look at this one.
Which way does the
Reasoning.
duck go?
Going left leads to a duck, which is a friend. Going right leads to a bear, which is a foe. It is better to make friends than foes, so the duck should go left.
Smart choice.
This is a picture of a crab.
That's right. Is this the right order?
No, the correct order is Sun, Earth, Saturn.
Based on their design, which of these would go faster?
The car on the right would be faster. It is more aerodynamic.
Then the next one will be translation of
I
visuals.
see you're drawing a guitar. You've added an amp. Now it's an electric guitar. We can make some seriously loud music now. Given that you added drums, how about some 80s hair metal? All right, I see you've added a palm tree to the drawing. Change it up with some beachy vibes.
Okay, now let's talk about their
What movie?
cultural understanding.
I think they are acting out the famous bullet time scene from The Matrix.
Ooh, nice. What do you think might happen next?
The cat is going to jump to the wall and stick the landing. It's going to be a perfect 10. Oh, and it's a miss. It looks like it was just a little too far away, but don't worry. The cat is a natural athlete and it will be back up there in no time.
Okay, I've got one more for you. Describe the drawing I made.
It is a simple line drawing of the constellation Gemini. You did a good job of capturing the beauty of Gemini.
Nice. That's it.
So that's all around Gemini. So this was like, it just blew up on Twitter based on the capabilities that we are not seen earlier. Making the connections. It's multimodal, means it will understand the text, speech, plus visual, and combining all three together. So far, Google had been kind of very much behind on AI, but when they kind of released this video, the shares were up like 5 or 6% after that. But now the battle, I'll skip all that, but the battle is so fierce. Okay, so before I go there, another thing was they also ran it against, the ChatGPT and reported results of, on a general, how does it perform against ChatGPT 4, reasoning, math skills, coding skills. And this was like, hey, on every aspect, it is better than ChatGPT 4, right? Talk about video, audio, and all that stuff. Now, this is available in 3 different flavors: Gemini Ultra, Gemini Pro, Gemini Nano. This will be maybe on things like phone and all that stuff, right? So great. But the stakes are so high that later on they admitted that whatever we saw right now is not available in its form as it is. So it was very next day, I saw a report from BBC saying they admitted that this was edited to look better. So the video that we saw, eventually these things will be implemented, but they're not there yet just now, right? So it wasn't, and if you look into the details, and Jay, thanks for sharing the link. There are many reports on how this information was fed to the AI model. It's not really exactly the way we saw in a video that it was saying and the AI model was able to understand. Those capabilities are still being built. I think Google could have done much better way of saying, this is what we envisage it to be and working towards it. And if then it wouldn't have come across as if they had tried to cheat it. But given all that sense, even if I consider that, yeah, it wasn't as good, it was an edited video, I think I still am impressed that if this is what they eventually would be in a year, it's still a huge leap from where the AI is right now. So I'm still bullish on Google as a company. Whether AI or not, the numbers on Google balance sheets are impressive. And if they can pull this off, hats off to Google's team. But it actually tells us how big the stakes are in this AI game, that Google, whose motto is what, do no evil, actually didn't stand with their motto. They didn't come out true to their motto. They did a thing which could be classified as a little evil. They should have been more forthright in saying, these are the capabilities we are working on. Stock was up 8 and dropped next. I don't think stock dropped. Actually, I was surprised to see that after BBC report, the stock did not have huge impact. So I think this is where the jump that we saw, and stock was still okay. I mean, it didn't jump. There was not too big of a change in the stock after the BBC report came out. But Yeah, d- just don't write off Google from this AI game just yet. All right, I think that's all for today. I'm glad we went and covered everything that I had on radar. I can hang around for 10 minutes, 10, 15 minutes. Anything else we want to talk about? Oh, by the way, I think we will probably have session next week. It's going to be pretty light. No document. Probably I'll just bring up do a quick recap of 2023, and I encourage you to think on the lines of each one of you to maybe it'll become more interesting. What I want to talk about is, and you should do this introspection, is the stocks that surprised you the most, the stock that I think I had a list somewhere. Just see if I can find that list. And we're just gonna have a little lighter session next week. Let me just see. Hold on. Let me just put up that question so you can come up prepared with those. We'll have some fun stuff for the next week. Okay. Let me. All right. Oops. All right, think about these, and we're gonna discuss it next week. Stock that I'm conflicted about business versus valuation. Which stock in your portfolio you think that your long-term thesis is finally working? What was the dark horse for 2023 portfolio? Which stocks disappointed you the most? Reasonably priced stocks that you are most bullish about. What else? Stocks on radar for 2024. So yeah, maybe we'll do a little recap and just have a friendly banter chit chat for the next week. I see question AC is asking, where can I learn how to trade options for a beginner? So let me AC, I had done a few boot camp. So let me point you out to the to the link on the boot camp. Okay. And then you can bring up any questions that you may have, in these meetings.
I also posted the Tasty beginner course. Just check that.
Yeah, if you have time, watch Tasty Trade for free. That's the best one. Or you can also look at where's the link to the boot camp. Did I miss out? Okay. No. Yeah. Look at both. I'll share the link with you, but this is where it's from beginning all the way to advanced level, introduction, call options, all the concepts around options as a retail investor. Not going into too much of a math behind it, but how to utilize that. There are 13 videos that you can also watch. Is Tasty Trade a good platform trading over E-Trade or TD Ameritrade? I don't trade. I have with TD Ameritrade and Tasty Trade, I find TD Ameritrade more useful, but just for me. Because I mean, you can customize a lot of stuff on your TD Ameritrade. I haven't got that hang of Tastyworks just yet. I still use them to just pay my education fee. Also, how is it for options or spread trading? It's not slow. I mean, the only thing that we have to worry about when we are doing these trades is that you're getting the best pricing. And from pricing perspective, I think both are equivalent. I would not use Robinhood because you don't get the best pricing on Robinhood, but both Tastyworks, basically Tasty Trade as well as TD Ameritrade have you get a good pricing. So there is no issues on filling on the trades. But I heard some people on Twitter that have been forced migrated to Charles Schwab platform. And if Charles Schwab does that for me, I'm gonna basically move over to maybe I have to start looking at Interactive Broker. Because yeah, what I heard is that the Charles Schwab platform is not that great. I don't know about E-Trade. E-Trade got bought over by someone, right? Was it Morgan Stanley?
When you say the platform, do you mean the trading software?
Correct. So I know someone on
We think of Swim because Schwab is discontinuing the old platform. Street Smart is being closed. So think of Swim as the platform.
Yeah, so that's what I heard is that that they're not gonna sunset Thinkorswim. They will still retain Thinkorswim. If that's the case, then yeah, I'll stay with Charles Schwab.
That's known. The problem with Schwab is they have a bad
Margins.
margin calculation engine.
Yeah.
So, for example, someone who does unbalanced iron conduits, they have a weird way of calculating which takes away more buying power than they need. TDA knows how to calculate and it's accurate.
Mhm.
Schwab does not.
Yeah.
So once it gets switched over, the same trade in Thinkorswim on Schwab is not going to be the same margin as in TDA. I've seen that side by side.
So I'll have to check that because I think so far, I mean, margins really haven't hurt me or hit me because I am generally very conservative. And let me go back and look at just one sec. If I look at my trading history, yeah, I have maximum, I think the buying power I've used was in August, that was around 40%. So I never felt a need for margin, but that's was I'm still on TDA, but I'll have to see if after moving to Schwab, if my buying power use suddenly start to get in the range of 50-60% on an average, then I'll be really concerned. Right now, I think it's around between 30 and 40. So I'm still okay. E-Trade have the issues with their Pro and Power E-Trade is good for option trading, but hard to keep track of GL. I think that's everyone have there. I will hold out to. Okay, so there was a question on scalping. I actually don't scalp. So maybe someone else who scalp on day basis. I've heard of, there are some traders who do gamma scalping and all that. I don't do that. So, but you could look at some good videos on Tasty Trade. They do have some videos on gamma scalping. I don't know if anyone else can pitch in on scalping. Chandra, unfortunately, I don't do that because that will need you to, be glued to the screen if you're doing a daily scalp, and that's not how I want to, adjust or set up my day. But check out Tasty Trade. They have a videos on scalping. Cool. All right. I guess that's it for today then. Like I said, next week will be light. So if you have anything else to do, or feel free to go and enjoy. I'll also probably have some fun time, and we won't have probably mostly Q&A, talk about some stocks, or if there are stocks that you want to Ranul bring up and say, hey, let's pull up their financials and see the stuff, like we'll look for Nvidia, we'll look for Arista Network. Yeah, maybe we can do that next week. Spend a lot more time over there. Cool. Thank you, everyone. Talk to you next week. Bye-bye.